and hand you straight over to Mr. Williams.
Yeah, thank you, Peter. Thank you, Rita. It's Tom Williams here. Nice to talk to you. Right, so I'm giving this 4-hour chart a lot more attention now than I used to, this 4-hour, because it's surprising the principles that show up on this chart. Now, admittedly, right at the top there, we have an upthrust, which is an obvious sign of weakness, especially in the 4-hour chart. All right. There it is. What's that? Upthrust? 119. So study these dialog boxes carefully. Don't just skip, you know, and then gradually, when these upthrusts occur in the future, which they will do, in your lifetime you'll have thousands of these upthrusts, and there'll be a chance for you to make money on them. But what's interesting with this 4-hour chart is there are at least 1, 2, 3, 4 principles I can see. Now, the first principle is we see here at the bottom here, high volumes come in, look, on this down bar. Now, volume, don't forget volume is activity. So there was high activity on that down bar. And on that activity, although we've got a red signal, it reversed, look. So there must have been buying in there. But you can't go long on that because it's too much supply, look. On both of these bars, the activity of volume is very high. That means supply is there. Okay, but you're fully aware of what's happened there. But what you're doing, I've repeated this many, many times, you're looking for a test. In other words, the market needs to fall back down into that area. Right, and bang, there it is, right back down in that level. And look at that low volume, low activity. Now, even if you learn to spot all these, right, you'd be an expert in the market. Because the market works on supply and demand. The market's been marked back down into this area, this level, right? And where the volume was high here, showing there was supply, now there's no supply, look. And the market works on supply and demand. If there's no supply, it means demand must be greater than supply. So there's 2 principles at work right there and then. Now, the next principle is in the following bar, look. I've had several people ask me to tell them more about pushing up through supply to the left, which is bullish. Now, you all know that market don't like high volume and up bars. However, this is one case where it likes high volume and up bars. And the reason is it's pushing up. See, when these markets go sideways like this here, there won't be hundreds, but there'll be thousands of traders somewhere in there. And they weren't too happy when they saw this market fall here. Now, professional money, they know how these people think and how they're liable to behave. They don't want to have to buy off these people, right, if they can help it. Because to them that now looks like a fairly high price. So they have a wide spread up. And of course the high volume, as it pushes up, notice it closed right near the high, right, shows you that they're prepared to absorb anybody selling to the left. Right? Now, what we really want is confirmation, a test. And lo and behold, if the market's bullish, you usually get on the very next bar, look. There's a red down bar, look. The volume is definitely lower than the previous bars. That means that the supply has been tested and there is no supply, so that means higher prices. So you've got the principle here of stopping volume, you've got the principle here of no supply, you've got the principle of pushing up through supply to the left. The supply would be in this top here, and there's a test. That means that's why it's gone up. Okay, so it's gone up, bars are blue, and lo and behold, Gavin shorted on this, on the strength of this. There's what we call an upthrust. Upthrust, right. The computer agrees with this. Okay. Read those dialog boxes carefully. An upthrust is when the market's rammed up only to fall on the low on very high volume. It must have been selling contained within that volume, right, to cause that, and that's what's brought that signal up. Now the computer program has no, it avoids the most, the weakest part of your trading. The weakest part of your trading is you thinking up reasons of why it's not bullish or why it's bullish. Computer doesn't do that. Computer said, look, you told me that if this happens, right, it's a sign of weakness. That's all there is to it. But human beings tend to think, oh yeah, well, perhaps they are closing out because it's Friday, but it's still going to go higher. But you see, you can't help it these days of developing what they call a gut feeling about the market. But computers don't do that, and that's why I always say to people, ignore the signals at your peril. Well, Gavin shorted on the back of that, and it's come off a little bit so far. Now, it's very interesting, this 4 hour. So we've got these principles here now. You've got the stopping volume, which we all know about. Right, it stopped, must have been buying, because it's down bar and high volume, next bar's up, look. But the market cannot go up when there's supply present, so it has to test. So it slowly rolls over. Down here, the volume is obviously, or activity is very, very low compared to this. If there was selling in there, that volume would be high as it pushed down. Professional money saw that, would see that immediately, like turning a light on in the room when you went to bang, the light goes on, they'd see that straight away. And then they have this pushing up through supply to the left, right? And you say that pushing up through supply to the left because of this principle behind you. And then they test it, so you know it's going to go up. But then you also know, after it's gone up a certain height, that this is a serious sign of weakness. Up thrust on very high volume. Now, are there any questions? I've got Peter and Rita staring at the screens, and they will answer any, or tell me of any questions that you have on this particular chart.
So it's Peter here again. Another feature that I think Gavin was interested in talking about was that this is a new high, isn't it, for the S&P future at least. I haven't checked the cash market. And as Tom probably vouch or say, that when you get an upthrust after a move up into new ground, then it's definitely a sign of weakness. Is that right, Tom?
The volume's high. As long as the volume is high. The volume is activity. So it has to be weakness, doesn't it? It's gone up into fresh high ground. Professional money are very, very nervous now. They've seen a nice little profit, fair enough. a huge amount of activity. Now, on that activity, right, where did it close? Right, there it is. It's closed well off the high, look. And that's what brought that signal up. So there must be weakness there. It can't possibly be anything else. Incidentally, he shorted the Japanese yen, which is also showing a similar type action here. All right, Risa says there's a question.
Yeah, so Gordon is saying, so should we expect a test of that upthrust next week on low volume? And Park says Seb Manby said that an upthrust during an uptrend is not always a sign of weakness, but is sometimes a sign of probing for supply. So why is this upthrust not possibly a sign of strength?
Well, the second question here, it can't be a sign of strength because it's, first of all, the market, you can see it's gone up in the background. That makes the market vulnerable, right? Don't forget, these professional people get nervous higher it goes. You're up in a new high ground there, or fresh high ground. So that volume can't represent anything else but selling. I mean, there's nothing to the left. So how can that amount of activity mean anything? All it means is that they're selling. And if they're selling, you'd expect a sign of weakness to appear. It's as simple as that. They're up in a fresh high ground, right? You've got massive amounts of volume here. Well, that volume, there's nothing here, so it must be selling. It can't be absorbing or anything else, can it? It can't be a sign of strength. That's why it's coming off. What was the other first question, Brisa?
Should we expect a test of that upthrust next week on low volume?
Don't try to predict the market like that. What you have to do is learn to recognize the principles involved. And when or if the principle appears, it's like turning the light on. You go into a room, you go in the bathroom, you pull the wire spring, and bang, the light comes on. But you can't predict the market. The markets can't be predicted as such. You have to know the principle that might occur. If it comes off a bit now and tests, then yes, it may start going back up again. But we don't know that yet. Okay? Any other questions?
So another question here from Winston. I thought there would be buying at the bottom and not selling. And it says previous chart. I'm not sure what the previous chart bit's about. But yes, buying would occur at the bottom. It's like if you were a market trader down the fruit market, you wouldn't buy at the highest price instead of the lowest. It's the other way around. Is that right, Tom?
What's he saying? Well, yeah, because the market is, what you're talking about, the market becomes vulnerable. When the market goes up, you can see we're in a nice clear uptrend here. So it's been going up for some time. The higher it goes, of course, the more nervous professional money become, holding up all those contracts, right? But if they go to buy, they obviously have to buy on these lows. You're quite right. I can't really see what I'm doing here.
Go to the forward there. There's a really good signal just down here on shakeout. Keep going, keep going, keep going, keep going. Yeah, right there.
Oh, yeah.
Right, look at the buying on it. Massive buying. It's tested almost immediately. That's a good principle right there.
Now, Gavin's leaning over my shoulder, and he says, look, that's a shakeout.
That's where I'm actually selling. Oh, that's where I went long. We went long at 2033.
Yeah, Gavin says they went long then. So that's why, that's where they buy.
It's immediately tested. That's the beautiful thing about that bar. It's almost within 2 bars they tested it.
They tested it.
Nothing. No more.
Yeah. Yeah, so they're really pretty bullish there.
This is the first chart.
4 hour. This is the first chart. Yeah. Any other questions?
Have a look at the Japanese yen quickly. See what that was doing.
Put the yen up.
The yen is
Peter, please.
6J for the bottom. Look at the 15-minute chart. That's what I've been looking, 15-minute. Yeah. And then you'll see the same principle at work. Okay, I'm short from just up there.
Now, Gavin went short right at the top there. When you see that, that's screaming out at you that this is weakness here.
That's a trade alert that I sent out 2 days ago, in fact.
Matter of fact, he said he sent out a trade alert. Supply coming in. Professional money would see that. Up thrust. So we've got 2 nice signals here.
Can you ask the audience, Tom, if all the Trading the Markets members got the alert for that setup? Because
Ask them.
Gav was asking, did all the Trade the Market members get the alert for this? Was it 2 days ago for the Japanese yen? So look for the upthrust that might come along, and it did come along today. Just type it in if you would. Yes, no. Yes. Yeah, there's a few people typing in. Yeah, good. Great. Okay, any more questions, Rita? Yeah.
Henry is saying, what defines fresh new ground? For example, if the market retraces, what would constitute fresh new ground? How much to the left?
We don't follow any formulas. We don't follow any, you must have 30 bars, you must have 50 bars, all that stuff. It's just something that develops. I say your skill as a trader develops. Up in the fresh high ground, there's nothing obvious immediately to the left. Now, here, in this example here, right, we have this to the left. But by the time the market reaches here, probably anything that happened here has been discounted with this trading in between. Now, nothing immediate to the left is fairly obvious as here there's nothing much to the left. It's in fresh high ground. Now, the idea of looking at that is that if you get very high volume, what's causing that high volume? Now, admittedly, there will be a little bit from this high, but still weakness, look. So fresh high ground, just what it says it is, it's sort of fresh. You can't see anything much to the left. I mean, I always use 20 bars because I've got difficulty in seeing properly. But if there's nothing within 20 or 30 bars, then there's nothing really much to the left.
Okay, Steve says, my style of trading is mainly day trading on a 3-minute time frame. Does VSA work as well for this time frame?
Well, your program can create any time frame you want. So it's up to you as a trader to check all this out. Check the different time frames. But what we tend to do, we look at, say, the 4-hour chart, which gives you a pretty good idea of what's happening on a reasonable daily sort of basis. Right?
That's interesting. There's a 3-hour chart, Tom.
Yeah.
These charts do, if you're on a 3-hour chart, it still catches
Yeah, well, you see,
interest.
how I describe that.
For example, that's the beginning, that's the top.
Yeah, exactly. So, you see, if you're a doctor in a hospital and you've got a patient with pneumonia or something, and they just come into hospital, they're ill. Now, you give your antibiotics or whatever. Now, it doesn't matter how often you visit that patient, every minute, 5 minutes, or even every day. The patient isn't going to get well. You're not going to find much difference in the condition of that patient until you see stopping volume. In other words, the pneumonia is being cured. And that's why these different time frames work. Check the different time frames out. It's easy enough to create them. And then you get a feel for it. I mean, I tend to look at that 4-hour. It gives a very good idea of the sort of likely trend of that market for the day or for a few days. But the end of day is also very good. But the 4-hour seems to come up with principles that we learn to recognize. Now, what chart we're looking at here, Peter?
3 minute of the S&P.
Right, this is a 3 minute of the S&P. Look, it's still the weakness. Look, here it is. I mean, it's got to be there because the weakness doesn't just happen in 15 minutes and not in the 1 minute or 3 minutes. There you are. But your skill as a trader has to play a certain amount of a part here. Keep checking these different time frames and you'll soon nestle down into 1 or 2 that you can keep checking. Keep an eye on your trade or looking for trades. Yeah, it's updating now. But even here, look, there's a weak looking bar there. There's no signal on it. These blue bars that go up like this, sort of like almost attempted to upthrust, close in the middle. But the volume is low, there's no demand, look, and that's why it's come off. And look at that upthrust up here, look. How's that for a nice sign of weakness? Right there, look. Okay. There it is, there, look. There, make it clear. There it is, that's an upthrust. That's done deliberately to, they know perfectly well the market's weak. Catch stops, mislead as many people as possible. Squeeze the last bit of blood out of that trade and let it go. They stop supporting the market and it falls. Any questions?
Jamie comments, I think the last closing bell I attended, the S&P was around 1950 and Gavin was saying it's on its way to 2000. It's now 2060, so well done, Gavin. Can we look at US dollar versus the yen? I've got a question. Can you also look at US dollar yen spot, hang on a minute, and compare with the future? All right, we don't have the spot. Let's compare with the future if it is comparable and we can work on buying in this instrument if we do not have the future yen contract? And is the 119?
Well, the thing is that the future will run in harmony with the spot cash market, because there's traders called arbitrage traders, and they make their money from buying one and selling the other in large amounts in just a matter of seconds or a minute or so, and that keeps them in line. So we know that if there's weakness in the cash or spot, it'll be in the future. And if the weakness is in the future, it'll be in the spot and cash. It's not our policy to actually give direct advice on buying and selling. Although Gavin sends these alerts out, I suppose that's as close as you'll ever get. Because, you know, try to tell thousands of people to buy now and sell then, it's just been a nightmare for us, as you could possibly realize. But what we can do is teach you how to read the principles, and you won't be bothered listening to other people then, because you'll be an expert in your own right. And once you pick this up, you'll have this skill with you for the rest of your life. I mean, don't expect it to come overnight, because I suppose it is confusing at first when you come in and not have any idea how the market really works, especially if you've been bombarded with all these mathematical formulas and Dow theory and all these things. News. You know, think, oh, well, the news drives the market and all this stuff. They will use news, right, to move the market, but only in their favor. It's not designed for your benefit at all. So it pays to settle back and learn to, should we say, fly your own aircraft. Don't rely on other people. But you must learn the principles. Keep a check on all these different time frames. And don't do anything unless you actually see and recognize the principle at work. What chart is this? Oh, this, right. Well, it's pretty obvious there's weakness here, look. Right. You know, supply, professional money saw that, would see that immediately, so they have an upthrust. They have another one there, look. Right, and then they let it go. Now, what's going to stop that is we want to see stopping volume. We want to see professional money re-entering the market for the long side. And prices have to fall enough to become attractive to these people. But you can't really say it's going to happen at that level or this level. But it's like turning the light on. If you recognize the principle, when it happens, you'll see it. Right? Anything?
For the yen, did you? All right. So Tom is asking, did you enter at the top of the upthrust red bar or below the low of the red bar? Well, that's a question for Gavin, who's actually left the room right at the moment. So, well, but hang on, Tom.
Well, you have to wait till the bar actually finishes. It's a mistake both Gavin and I have made in the past. you can, something that looks like an up thrust, say, whoa, yes, another 10 minutes for that to run. But in 10 minutes time, it's not an up thrust, it's something else. So you must wait till the bar's actually finished. That would be good advice to stick to. And then as soon as you see it, then you short it. But it's pretty obvious at the top of that, isn't it? Not only that, you've got some up move in the background, which makes it vulnerable to professional money wanting to get rid of some of their holdings. You've not only got one automatic signal, you've got two. And even this blue bar here is an up thrust. If you look at it carefully, right? So there's the weakness. So even the next bar, look, they mark it up, look again. Look, that's got a top tail to it. That's a sign of weakness in its own right. Now, various parameters, there's no automatic signal on that. But you've got them on the previous two bars. And it's closed down. So that looks another up thrust. So you've got three bars here, weakness. Okay.
John is asking, do we have a 4-hour crude oil chart? We don't, do we? But we've got the continuous contract, so I think the daily chart. So we'll show John that because he said show whatever we've got.
Sorry, we've got to download the daily version. I'll wait for a few seconds for it to update. This end of day version is extremely good, I must admit. Gavin likes trading oil. He's an oil man. What was the question, Rita?
Basically, have a look at, can you give them your
View on oil.
crude oil?
Hang on, it's just updating. I remember the old days. You had to download all the data, copy it, and put all this in the chart yourself. Believe it or not. It used to take hours fiddling around with this.
It used to be worse than that before. People used to stare at the numbers, not at the charts. Going back to the 70s, I remember traders looking at numbers on the screen.
Wow, there you are. This is the final bit of this. Here it goes. $20 bars, so we can look at it, see it. Was that oil? Right. Well, it's certainly in a downtrend, that's for sure, isn't it? I can't really see any stopping volume, can you?
Well, that last bar, we've gone in as a narrow spread. I'm not sure you call that stopping volume.
Well, for this market to become bullish, you need to see a down bar. Now this bar is all very well, but it's got a top, what we call a top tail to it. Now, stopping volume doesn't normally have that. A top tail is where there's activity above the close of the previous bar. Now that usually indicates no demand or supply or something. And is that high enough, that volume? This is oil, Gavin. Gavin just walked it. Still looks weak to me. Gavin said he'd look at it more closely. He's got proper data. To me, that still looks weak. It certainly doesn't look as if it wants to become bullish.
Hit the 2058 level, which is the one I sent in the alert. One of the areas that's going to find support.
You could draw a trend line between these two highs, Peter, and this one. Get rid of that. First two highs, first low. Now you will automatically get some support on these lower trend lines, and you will automatically get supply or no demand on that top trend line if the market's still weak. But it's obviously trending down. It's slap bang in the middle of a trading range. There's nothing obvious happening, look. So what you do, you turn the page and try to find, don't do anything unless you can see a principle.
The point and figure projection, Tom, puts it down at $68 for the next move, and I did do a short alert on this about 3 weeks ago. So we could tell when it was up at 86.
Right, Gavin says there's a short alert on this 3 weeks ago. 86. Right.
Tom is asking, has oil bottomed out according to the charts? Please look at USO.
No, it hasn't. It's a simple, quick answer to that.
That's why he's making that 20 bars up.
Yeah, it's a bit buying, still a big downtrend.
Well, a little bit of buying there, a little bit, but that could be supply. It's telling us nothing much, this. Just it's still weak, still trending down. What time frame is this? 30 minutes.
Daily.
Oh, daily, sorry.
You might want to ask the question, Tom, has that market changed behaviour? Has it responded to any strength that's come in? That's the question I would ask. And the answer is no.
Right. Gavin's in the back here asking questions and answering.
Oh yeah, but that's the question you asked the audience. Has that market changed behaviour?
You can probably hear him.
Yeah, it hasn't. It definitely hasn't changed. Not yet. I would not mark that as a bottom.
No, of course not. I agree with you.
You wait for the trend to change and then you can say that was the bottom. You don't always pick the bottoms. You have to just wait.
You could draw a trend line on that, Peter.
Actually, put 200 bars up for that trend line. I've looked at this myself. Put up a couple hundred. That trend. Now you tell me that that's a strong instrument.
Of course it isn't.
Look at the strength. Every time strength dependent is rejected.
Yeah.
Yeah. And they've got it through. If you put the diamond trending system on as well, Peter, up there, you'll see that the diamonds are red. You put the two together, you've got weakness all over it. Yes, you've got some attempt to hold the market up, but it's not working. What do you think, Tom?
Well, it's weak, isn't it?
Market hasn't responded. You certainly wouldn't want to be short at the moment. You want to be patient. You want to see a principle.
Well, yes. I mean, you missed the opportunity way back at the top of this market for shorting.
If you turn off the sensitivity meter up here, tell me that the computer has a sensitivity indicator in there for a reason. Well, I'll be telling them shortly. I'm just saying here, if you can hear me, I'm sure you can, that the sensitivity indicator is built into TradeMinder to take out, if you don't like too many indicators in the software, if you don't want to see everything, which I think is a mistake, you can reduce the sensitivity, and what have you got? 2 red indicators in a downtrend and the price has fallen. That's pretty straightforward to me.
Yeah. Ignore the signals at your peril.
Quite right.
Because those signals were fed into a computer who's heartless, got no gut feeling, doesn't listen to the news, it's not influenced at all by any romance or anything at all, it's just cold-blooded. And that's why, cold-blooded, and that's why the signals, you must not ignore the signals.
Well, talking of which, so I'm going to have a look at the S&P again. We gave a target of 2058, which was short. Now look at what happened. Right? The chart doesn't lie. Okay. Look at where we're at. And we came right down to 2058, exactly where the point and figure projection was on the alert.
Well, I don't follow a point and figure because I don't have it.
I do.
Gavin says he does have it available. Any questions, Rita?
And Manuel is saying on the USO chart, the high volume spikes mean that smart money are unloading a part of their holdings. Is that right? That's what he's saying.
Yeah. I mean, in theory, that's correct because there's such high volume that there's buyers and sellers trying to interact at the same time. Yeah. But looking at the S&P, well, let's get Tom to analyse this chart. The market's come off at 6 points, Tom, from the alert that we sent out earlier. Maybe that's a good one for you to just go back and look at.
Well, I think I've already looked at that.
Let's put the indicator, the sensitivity. Look at where it's at now and tell me, do you think it's strong or weak?
Can you put 20 bars up? Well, what we're looking for is stopping volume. Well, I can't see it.
No, it's not there. There is.
I can't see it.
Look at the up bars, Tom. They're all on low volume.
Yeah. Yes, that's characteristic of a weak market. Is every time we see a blue bar, it's up on low volume, look. And the idea of this red trending system like this done deliberately because the way the market works, they don't want to give anybody the opportunity of covering a position from what we call a weak holder. That is, people that are locked in these highs here who are waiting for some sort of rally so they can sell. And they don't do that. And that's why these bars stayed red. Don't think that's just coincidence of that happening. It's done deliberately. Professional money are running the show here.
Next price objective is 2059. You can tell the audience on this particular chart. Right. If you want me, I'll put the charts on. Okay, hi everyone, Gavin here. Welcome. Yeah, next profit target for those trading the markets members, we hit the 2058. I'm still short. I'll show you in a second. And also we've got another target on the yen that's just come in. There's a little bit of you can see there's some buying attempting at 2058. That's not surprising. The point and figure chart actually gave 2058 as a key level, but 2056 and 2055, if we get down there, we could move down much lower. So these are key setups. But I'll let Tom finish, and then I'll log in, and it's 6:15. Is there anything else that you would like Tom to look at before I show my screen?
Well, there are various questions. What time are you starting, Gavin?
As soon as Tom's ready and finished, basically. So I'm here. I'm in 2 trades at the moment.
Okay. Should we pass over to Gavin?
Before you do, let me log into my computer.
Gavin's just got to log into. Gavin, Winston is saying, can we ask Gavin to have a webinar on reading of the scanner?
Done several of those, and they're on YouTube. But
He's done several of them, and they're on YouTube.
I'll probably do another one next week on the scanner.
but he'll happily.
I'll show you.
Here.
The reason I took the trade.
There you go.
I'm sorry, I'm going to log in here.
You're on the.
I'm going to log in from my computer. So just bear with me. Not bad. Look, those trades. That's the okay. There's the ES. Nearly $400 in the space of a few. Well, this week you can't argue with the principles, can you?
No.
If you argue with them, you won't make money. Right, just 1 second. I'm just logging in everywhere.
Well, you can argue with them. They're not arguing with you.
No.
They're not listening to you.
All right. Do you want to shut that mic off, Reece, when I'm logging in right now? Just
Marcus, do
switch.
what
Carry on.
Okay, Peter.
Yeah.
Okay, hi everybody, welcome. Let's just do a quick sound check before I move on. You can probably turn that, I can hear myself in the background there. Just bear with me a sec.
I know.
Okay. So let's talk about some a trade alert that I did. I'm in 2 positions at the moment. I'll show you them both. So I'm actually trading. I did send a trade alert out to our members on both of these. Okay, I'm just try and pull both of them up together, and then we can manage the trade through as we go. Okay, so we'll talk about both of these trades in a second. We'll talk about the setups. For those of you that are not familiar with the Trading the Markets alert service, this is a trade alert service where I and the team find trade setups, and we email you once we found them. And in fact, today we had a great short on the S&P, actually to the 2058 level. Now, actually, I think it's going to go through it, so I think I'll get an even better trade. And also, we sent an alert out 2 days ago to short the yen on an upthrust, and we've seen that as well. So currently, I'm trading my live account. This is we're going to run into the live trading room here now. This is, for those of you who are not aware, we trade twice a week, usually in the Trading the Markets live trading room. I'm trading the futures market at the moment, but we're just setting up the stocks as well. But at the moment, it's futures, and this is my live account that I'm running here in the Infinity platform, and I'm short the yen and I'm short the S&P. Now, it's unusual for me to be short the S&P because I've been long and making a lot of money on the long side. But sometimes you cannot ignore the principles of VSA. Now, Tom's sitting next to me here. You said to me as I walked in today, there's an upthrust, Gav.
Yeah.
Right? So he already saw the principle.
On the 4 hour.
It was already there on the 4-hour chart, but I'd spotted it on a 5-minute chart and a 15-minute chart. And for those of you who are members of the Trading the Market service, you would have got the alerts based on those principles, and that's why the market's fallen. You must believe in the principles. They're there, and as long as you believe in them, and as long as you trust in them, and as long as you are prepared to put yourself in the market, then you'll make money. That's the thing. Don't be frightened to jump in on a principle. An upthrust is a very serious sign of weakness, okay? And we saw it in the Japanese yen. We saw it in the British pound a few days ago. We've also seen it today in some other markets as well. So we look at a market and we say, well, does it exhibit weakness? Of course it does. When you see weakness appearing, you're going to see the volume first. And what is going on, actually, by the way, is professional money are closing out positions ahead of the weekend. Because the market made a historic high, they can't make money on up bars, so they're selling, they're basically shorting, which is why I'm shorting with them. Simple as that. Because I can see their intentions. Now I'm going to log in on the other computer so I can see your questions, because I know there will be some questions. So just bear with me a second. I'm going to switch the mic off just for a sec. Yeah, hold on a sec. That's it, sorry, I'm just logged in on the backup computer. Yeah, the trading room hours vary depending on what the market's doing, but generally speaking, we usually start the room at 8 a.m. New York time or 9 a.m. New York time, depending on what's going on. And then we usually run for about 2 hours, and we're trading live. You know, you'll see live trades. In fact, we did a live trade yesterday. We did a room. I'm going to send you all a YouTube video of the room from yesterday so you can see some of the setups, because we were long the S&P. Now, they're testing this level. which is exactly what I'd expect at this level. Because I did a trade alert earlier at tradingthemarkets.com, many of you got that, and I pointed out the reason I'm short on the S&P was because of this 3-minute chart. It's such a great chart. It's got all the principles. If you don't believe they work, well, you can't get a better chart than this. Look at this. A 2-bar reversal. You've got weakness based on price action on the 3-minute chart, but the 5-minute chart, which is the one I used in the alert, it's even more obvious. Okay, up here, a 2-bar reversal. Sign of strength, sign of weakness, sorry, 126. Now that is a serious sign of weakness. And I said, all you've got to look out for in the alert was no demand bars. Come on, here they are. Right, and I'll play the alert to you actually, so you can actually see this. So where did I get in? Well, you can see on the trading dome here, on the ladder. If I auto center it, it was way further up. It was about 206. Try to put the auto center on. Bear with me. Yeah, it was about 2064, I think, or 2065. The reason I didn't get in any earlier, and I should have, but I was traveling. I was traveling to Tom's. Okay, so that's the reason I didn't get in earlier. But in the trade alert that I sent out, and that's the most important part, I want to play this to you now. This is the alert. Okay, this came out about 2 hours ago. Tom, I was with you as we filmed this.
Oh, yes.
Okay, Tom agreed with me. Let's play it, and hopefully you can all hear it. And the market there, you can see actually where I got in, because actually it was about 2064. So I'm about 6 points up so far. But here's the principle. Here's the trade alert. I'm going to play it to you. Have a listen, because I think it'll help you. Signals on these bars, an effort to shake the market up. Hi there, welcome to tradingthemarkets.com, the trading alert service using the volume spread analysis sequential trade setups. Got a very quick alert I'm going to send out to you now, which is a short on the E-mini S&P. Now, I have been mainly long on this contract, but this is just a short-term trade. We're going to show you why. We made a new high. We know we've made a historic high, but today, look at the volume on this bar here. Now, this is one of my favourite setups. You see the market gets marked up, and then immediately someone's taking some profit there. You can quite clearly see it. It's a 2-bar reversal, and that now changes the behaviour of the chart. Now, if we look at some of the indicators that have come in just after it, you can see there was one here that's clearly no demand, right at where that reversal was. We then had here an up thrust, and that's exactly what you're going to look out for now on this 5-minute chart. You want to be looking for no demand bars, any up thrusts, any signs of weakness. But at the moment, I'm with Tom Williams at the moment, we're just looking at these charts. There is no obvious stopping volume that's here at the moment, and we do know we've got this markup in the background as well. So they may be coming down to test this bar here at 2058. But you've got a nice downtrend here in place. So any up bar on low volume or an up thrust confirms the weakness. And then on the 15-minute chart, you can see here, any effort to stop the market has been failing at the moment. You can see here, we've got a couple of signals on these bars, an effort to shake the market up, but it's failing. And then this bar, this is the 15-minute bar, notice the market's gone up. Look at the volume, it's the lowest, almost the lowest of the session. Okay, so what I'm looking for now is just to break down below 2062, which we're very close to. I've already taken a short trade here, and again you can see the weakness in the background. So we've now got some profit taking prior to the weekend as the S&P made a new high, and at the moment it's this bar here, the trap up move, that's in control. So I'm going to get this alert out to you now. It's a 5-minute, 15-minute chart S&P scalp trade, looking at a short when you get a no demand bar or an up thrust on the 5-minute time frame, which is the main one that I'm going to be monitoring. And I'll see you in the live trading room with Tom Williams very, very shortly. He starts here in about 20 minutes time. Thanks everyone. See you soon. Bye bye. All right, so that was the actual alert that was sent out, and we can see actually what happened after the alert was sent out. Here it was. I mean, it was pretty prophetic, really. Failed test, no demand. So if you didn't get in where I got in, and just so you know, I got in right on where I saw the weakness up here, you can see where this is going. Now, if it breaks this level now, this will continue to move down. Now, again, I just want to be clear, in the live trading sessions we do at tradingthemarkets.com, we're trading real money. This is a live account. So any trade alert that I send out, the majority of them I'm actually trading myself, or the group are trading here, or we've got some traders out in Poland. A lot of these people are trading these alerts, but they're using their own account size to manage their risk. We're not going to tell you where to put stops. That's not our job. We're going to show you the principles. That's what I believe Tom and I That's our job, isn't it? Show you the principles, and your skill as a trader has to come in. I cannot teach you, and Tom can't teach you to be a great trader. You're either good or you're not. But we can teach you, and we can show you in real time, which is what we're doing right now, that these principles are there. They do work. And hello to you, Flock. Nice to see you here. I hope I've pronounced your name correctly. But nice to see you. Welcome. And Jack says, Tom did an excellent talk on testing a rising market recently. Can we regard upthrust in a falling market as the reverse of testing? No. No, it's a different thing. No demand in a falling market is the opposite of a test, Jack, just to be clear. No demand in a falling market is the opposite of a test in a rising market, ironically. Okay, so here's no demand. In the trade alert and we'll send you the video. We'll send all of you who've registered the video of the trade alert so you can go and look at it. Because we do this stuff not in hindsight, we're doing it in foresight, and we're trading our live account. And when the hedge fund opens, which will be very soon, from what I'm hearing, you'll be able to see some of the results we're getting. But remember, everything we teach you is based on common principles that are there and have been around for hundreds of years. None of this is rocket science. We're not trying to tell you, well, we've got some secret formula, right, Tom?
That's right.
It's not secret. It's supply and demand. You know, and it's real. I mean, these indicators, someone said, well, you must have a secret formula because you don't tell us how the indicators are developed.
Well, we do.
Well, we sort of do, but we're not going to tell them exactly that. Because
it's at the bottom of the screen.
Yeah, well, you know, Sebastian's here. Sebastian's here. So hello, Seb. Oh, I didn't know that. Oh, hello, Seb. Sorry, Seb, I didn't know you were here. So he said all high volume and up and down bars need to have some sort of test, which is absolutely correct. That's exactly what has to happen. They need to be tested. Okay, if a market is strong or weak, if it's weak, you'll get up bars with no demand. That means that as the market makers marking the price up and saying, hey, we want to push this higher, professional money saying, look, we're not interested because we're already selling. Where were they selling? They were selling in the background. Okay, over here, look, that's where the selling took place. That's the evidence. I'm a former policeman. That's what happens. I look for the evidence. No demand, and then an upthrust. That's a sequence. That is a, I think Winston was asking, what is a sequence? There's a sequence here. 1, 2, 3. Now, I got the alert to go short late because I was driving. I was in my car driving to Tom's house, but it didn't stop me from going short. So I got in around here. I knew the weakness was there. I knew the market would fall, and I actually gave, in that video, in the trade alert, the target. We're well onto the target right now. But have we seen stopping volume yet? No, nothing. There's nothing stopping it. So why am I still short, says John? Because why would you even think of closing the position at the moment? If I see a principle come in that shows me they're actually now going to support the market here and move it back up, I will close the trade out. I'll make a, you know, my target on this trade is about $250. So that's how it works, and it's exactly the same if you look at the Japanese yen, okay, which I'm also trading, the 6J, same sort of principles applying. Okay, it's just starting to push back up. Okay, so what I'm going to do here on the yen trade, because I want to make sure I lock in some profit, is put my stop into a break-even and above break-even position. I'm not going to lose any money on this trade, but it's not as obvious as the S&P trade. Okay, so with the S&P trade, what we're going to do is just monitor it, and I'm thinking this could actually collapse quite a lot here, and I'm only trading one contract here. Now we have got a sign of strength here, right, which is just telling me that there's an effort to try and hold the market up, but I think this market's too weak. I don't think it's going to hold, and that's why I'm staying short. Now, for those of you that are still in the trade, I know a lot of our customers took the Trading the Markets members here are short with me, and again, I'd say to you, we've already now gone past the target I gave in the video. So now I'm going to be very cautious. I'm not going to. I've made my profit target on this account. It's a $5,000 account that I'm trading. I'm making some good money here. I don't want to give it back to the market. Okay, so I'm going to be very cautious. I've got my stop to break even already. In fact, I'll show you that in a second. But it's really going. It's tanking. Let's just let it go. Okay, and this is what's happening, Tom, on your screen. So we're currently nearly $400 up on the trade. The risk on the trade, by the way, Steve, was $75. I have very low risk on the trade. Winston, no, there are other sequences other than the ones in my book that I've now programmed into the Infinity platform. So there are other sequences that are in there, but this particular one at the top is in my book. If you go and look, I think you'll find it's there, or it's something very similar. But remember, we're not using mathematical formulas. So you've got to be, as Tom said, everything's based on what I'm seeing. I'm seeing selling on, this is effort versus result. The effort is here. Okay, they're selling into the markets. A lot of people are closing out long trades to take some profit, and they're marking it down. And look, on every single up bar, which we've got, and there's one down, but there's an up bar, you've got a sign of weakness, serious weakness. That's how it works. Okay, now we have got some strength coming in here. So what I'm going to do, let's get rid of the auto sensor. Let's just wait and see how far this goes. At the moment, it's not looking at all strong. Now we're at key level now. 2055 is actually quite a key critical level based on the point and figure charts. If you look at the alert that we sent out earlier, you can see that my initial target on the alert, which has already gone through it, was 2057. I don't want to be greedy with the market. The market is telling me something. We know that it's moved down. We know the principles are there. 2057 was the target. That's where we might find some principles coming back in. Now, in the Infinity platform, I did get alerts, yes. Someone's asking about that. Okay. And you'll see here, there is the setup. On the 240-minute scanner, the reason I sent you the alert is because of those three principles. They're in the scanner. They sent me an email. They warned me on the big time frame that the smaller time frames are turning negative, and that's why we issued the short alert. So there's obviously a logic. There's always a logical reason why we're doing these things. We're not guessing. There's no, oh, let's just throw an alert out there and hope it works. We're very accurate. Our alerts at the moment are 92% accurate, meaning if you go back and audit them, which we've had them done, they're extremely accurate because they're based on principles that we know work. So when you see these principles appearing, as Tom always taught me, don't ignore them. You've got an upthrust on the 4-hour chart. You've got supply coming in. You've got no demand. So what's the market going to do on that? It's going to fall. I mean, that's what it's doing. Now, I did expect some support around the 2057 level. We've got some stopping volume here, and it may hold this market up. So what I'm going to do here, I'm going to protect my trade, okay, because I can always get back in. There, I've taken the trade off, I've put the profit in the bank. It's the first thing I've done. Now I'm going to wait for another principle. Now the reason I'm doing that is I'm not ignoring what the software is telling me, that there is an effort to hold the market up here, and there's a lot of volume coming in. I suspect we're going to see an upthrust. What will I do if I see an upthrust? Jump straight back in. In fact, next time I'm going to put 2 lots on, okay, 2 contracts on, not 1, because I know where the market's going to go. It's still going to be weak. It's not strong. So, but I've already put the money in the bank. That's what you've got to do as a trader. Do not try and hold on. If you see a principle, that's the highest volume we've seen, the next bar looks like it's going to close higher. Read the dialog box and you'll be very, very surprised that it's absolutely correct. The bar is into fresh low ground, which means there's no price action to the left on this 5-minute chart. There's a big down move behind us. If the next bar closes higher, which we've got 9 seconds to do it, it confirms some support coming in. I'm not going to stay short when I've got support coming into the market. Okay, I'm going to either reverse my position. There it is. It's now closed. Now it's on high volume. Now that's bad. This is why when you see these principles, you look at it and say, well, you've got high volume on this up bar. Now, if we see a test any time in the next 3 or 4 bars, this market's going to rebound. It's going to go back up. Okay, as long as we see that principle. Okay, is there any questions so far? So I'm still in the position on the yen. Okay, so no particular change there. You can see where it's at. It's not moving, so I've protected my trade. I'm going to make money on the trade, not a lot, but it's enough to add quite a substantial amount to the small account today. But now I know the big players are coming in. I'm just aware that we may get a bounce here, and so I've closed my position out. I've only traded one contract initially to make that money, just the 1 lot. Now, if I see a principle, and this is what Tom's been saying to me, you've got to pick the tops and the bottoms. I'm a little bit more cautious. I wait for the change in behaviour in the market. But this market at the moment actually still looks weak. I could, if we see a no demand bar, go short again, if we see it. But looking at these two bars here, that's the highest volume of the session. It's coming around the right time, around the New York lunchtime session. So what I've done is all the way through, after you see these weak bars, the market changes behaviour, as we can see here. Here's your up move. Here's your mushrooming over. These are your trades, guys. Okay, they're there. I sent them in foresight, not in hindsight. Forget looking at past price analysis. This is real time. No one can argue with the fact that TradeGuider and VSA show these principles as they occur in the market and trade them. And there's very few people that do that. And the reason very few people do that is trading is actually quite difficult. I remember Tom talking about Tim Raymond. Do you remember that, Tom?
Yeah.
He bought this offer. He's a Forex champion.
Yeah.
You told him, well, trading's difficult,
Yeah.
You tried to talk him out of a £5,000 sale.
Yeah.
But he still paid you.
Yes.
And he's a champion.
That's right.
Yeah. Tom's just nodding in the background.
Nice, clever guy.
Well, being clever in trading is not necessarily a good thing, because if you're too clever, you try and analyse things too much.
Yeah.
Which is why my IQ is only 16. I'm an ex-policeman, but I managed to take trades because I see the principles. Don't overcomplicate trading, right?
Yeah, you can read a lot of stuff into it.
You've got to be very, very careful that you don't.
Like it's half day, or they've gone to lunch, or they've done this or done
that. Don't read too much into things. Look at the principles. They're there. Believe in them. Look at this chart. Look at the alert that will email you. And don't believe the news. Yeah, don't believe it. I think we might see a no demand bar here. It'd be very interesting now. We've got a couple of minutes here to go. But again, I don't analyse the bar, John, until it's closed. Until it's closed. Steve says, do you want to offer an expert advisor for MT4? We do have an MT4 plugin, Steve. We do actually have a VSA system, which is all these signals that you're seeing for MT4, and it does have an automated email alert system. Absolutely, yes. Does it automate? No, we don't like automated trading. We believe that the best person to trade is a human being. Some computers do it well, but then some computers get it wrong and cost you a lot of money. We've seen this. You should be managing your trades, not a computer. And if you're too lazy, or anyone out there is too lazy and just say, well, I'll let the computer do all the trading for me, you're going to have maybe a few days of profits, but my goodness, when it goes wrong, and look at one of the biggest hedge funds in America, it happened to them on the flash crash. They were on the wrong side of the market, and they lost millions and millions of dollars at the time, because they were relying on a computer to make the trading decisions. I think trading is a human endeavour, just like golf or football or rugby or anything else. We're all in competition. That's what trading is. And the ones that win are the ones that understand the market. The ones that win at golf are the ones that have practiced enough, have got the good equipment, the right shoes, the right trousers, the right jacket, the right clubs, the right caddy. They're the ones who are going to go around the golf course successfully.
And they're skilled traders. And
they're skilled at what they do, and it's the same with trading. Exactly the same thing. There's a lot of volume coming in down here at this level, and that doesn't surprise me. The initial target was down here in the alert, and look at where the volumes come in. That's to do with point and figure charting, and it's all very, very, very clever, because you can measure where the market's going. You don't have to guess it. Okay, you can see where support is going to come into the market. So you're shorting it, and now what we've got is an up bar. The volume is less than the previous two bars, but it's still pretty high volume. So I'm not going to do anything now. I'm going to wait. I'm going to be patient. Tim's asking, do I just use a 5-minute chart? It's a good question to get into the trade. No, Tim, I actually, to be fair with this trade, I actually went to a 3-minute chart because it had a better entry. I actually went down a time frame. I don't usually use anything lower than 3 minutes, but you can see here and here I got entries in a downtrend with weakness in the background. Okay, here they are. Diamonds are red, bars are red. That's proprietary to TradeGuider. We're trending down. We've gone up, and the trade alert I sent was look for low volume up bars. Well, come on, there they are on the 3-minute chart. You can't argue with the facts, and no one can. That's what I love about VSA. It's either there or it's not. And if it's there, and we've sent the email out to you, and we've warned you, get short S&P to the target level. Are we wrong? Sometimes we're not wrong. Sometimes the timing is the big thing in trading. Sometimes timing is an issue, because I knew when I saw that bar this morning that that should turn the market at least to the downside for the day, and I waited. I didn't send an alert out here at the top and say, hey, I'm going to be really brave and tell all our customers to go short on that bar, because it could have been tested, it could have gone higher. But once I saw these things happening, and when I got to Tom's, I said, look, immediately it's going to be a short alert. Okay, and let's go back to the 6J contract. I've already protected my trade on the end, so I'm not going to close it. There's no need to close it. Okay, it's in fact it may have already. Just have a quick look here. It's still running. Yeah. So again, I'll talk about the yen trade now because I've closed it. I'm still in the yen trade, and again, this is a trade alert from 3 days ago. But you have to be patient. Look, here's a 5-minute chart of the yen. There's your principal. There's your up bar. There was my entry. I'm protected. I'm not going to lose any commission or any money on the trade. I'm up $100. Now, already I've come to an area here where I know this is weak. This is a weak instrument. Why would I need to close this trade when it's at a level here which could take off to the downside? So I'm already here in a protected position. There's my entry. There's my stop. I'm in a winning trade. Why close that one out? Let's see if it runs. If it doesn't, I'll take $37.50. That'll cover my commission. I won't lose any money. And today I've added nearly 10% to the account. Why would you want to think of closing a position that actually has got evidence of weakness? Let's look at this. Let's study it. Here is your up bars. Okay, remember, weakness appears on up bars. Buying climax, supply coming in, weakness based on price action. Now, it's trending down. The market has changed behavior, guys. I mean, there's no doubt about it. It definitely has. Look, there's your up move. There's your down move. Here's your low of the day. Where could this go? Very easily down to there. And if it broke that, it would take off to the downside. But the big weakness on the yen is not on the 5-minute chart. It's on the bigger time frames. That's why I issued a short alert. This is what I was asking you to look out for. Remember the golden rules of VSA. When weakness appears, it appears on up bars. That means the market's been marked up on massive volume. Here's what we were waiting for. We have to be patient. We don't always get the trades the immediate second we send the alert out. That's why we tell you what to look out for. Have a look at the 60-minute chart here. What do we see? 60-minute chart was marked up into a previous area of resistance. Here was your supply, and it's done exactly the same thing. Supply. Next bar's down. Now they're testing that supply here. They're testing this level. And on this hourly chart, now I'm not going to hold this trade into the weekend, but you'd be silly to do that. You don't want to hold positions going into the weekend. But at the moment, this is making new highs, but it's hitting supply. It's come back down. We've had a test. If this closes on the low, then that's a failed test with weakness in the background. And notice the volume is very high, but look at the spread of the bar here compared to the spread of the bar here. The spread is narrow. It's closed in the middle. The next bar's down. All right? So that's the logic behind it. Hello, Lance. Haven't seen you for a while. Are you long any of the Japanese stocks as there's a negative correlation between the currency and the stocks? No, I'm not. I don't trade the Japanese stocks, Lance, but good to see you. I will not stay in. I'll close this position out fairly shortly. I'm not going to hold this, Adrian. No, and the reason I'm not going to, I don't hold currency positions into the weekend simply because professional money trade over the weekend without telling us. The banks, the Forex market is traded on a Saturday and a Sunday. You'll never hear that publicly, but it is. That's why you get gaps. So my advice to you as a Forex trader would be do not hold positions in the currency markets over the weekend. Why would you want to do that? Because you might end up waking up on Monday morning with a gap in the market and you have got all sorts of problems, especially if you're trading futures, because you won't be able to put a stop in place. Ian says, Gavin, with regard to the last question, do you use multiple time frames to look for reasons to close a trade or just the point and figure targets? No, I do actually look at the chart, and I look at the, and if you look here on the S&P, all right, here's the S&P, okay? So watch what's going on. We're in a downtrend, but the big, I'm trading against the big trend. which is unusual for me, but when I get a principle, you can't argue with it. And what's happening here, you can see on this 15-minute chart, we are bouncing off this principle. You see, I'm not wrong, that principle's right. And if we look at the 5-minute chart, just here, you can clearly see, look, where I closed my position, which was just in here, it's bounced up. Now, it is going up on low volume at the moment, which if I get another principle coming in telling me there's no demand up there, great, I'll probably think of shorting again. But at the moment, there is a lot of volume on these two down bars. Some group has come in, stepped in, and supported the market. And I'm not wrong because it's gone up 2 points. So I did the right thing to take the profit out of the market when I saw it. And that's what a professional trader does. They look at the market, they read the market bar by bar in different time frames. And how we do that? Well, we look at the scanner. And the scanner is what I'm using all the time to find my trades. The money I made today was simply made by these 3 setups on the 4-hour chart. There's the principles. You ignore them at your peril, Tom keeps saying. Well, I didn't ignore them. I saw an upthrust. I saw supply coming in. I saw a change in behavior. I saw no demand. I saw the principles here and I went short. That's how you trade. And you just take the trade. Okay, and then you manage your risk, and if you're wrong, you get out. But when Tom was teaching me to trade, he actually said to me, Gav, one of the good things about you get out quick, right?
That's very true.
So I don't stay in a position for too long if it's going against me. If it's working for me, like the E-mini did there, the S&P trade, and it's worked for several of our Trading the Markets customers. A lot of people went short at the same time I did. And that's because the principles are there, not because I'm guessing them. The principles don't lie. Again, on this yen trade here, just look at the principles and learn them. Look at the change in behavior in the market. Look at the effort versus result in the market. Okay, and then you decide how much money you want to trade. I'm only trading in the live trading room 3 contracts maximum, and I've never actually traded more than 3. I've only traded 2 contracts. The website is, let me just put that up. I will make this public. I think I can put the link up so you can actually view it. I don't know if this will work, but can you let me know if this works? I'm going to put the video up, and can you just oh no, actually it's linked to me. That's why, so it won't work probably. Oh, we'll try. Just let me know if you can view this video. I don't know if you can, but I've just put the video up of the trade alert from earlier today on this short in the S&P. But I will make it public. But the actual website, for those of you that want to know, is just tradingthemarkets.com. It's right there. Yeah, there's the website right there. Payman, I just saw your question. There's a few questions. Thierry, when I place 1 or 2 contracts, do I place 1 target or more? No, I place 1 target. I usually, whenever I'm trading, I've got an initial target, which is based on the point and figure charts. I saw your video, says Payman, from Metastock, talking about your scanner for end-of-day data. You've got the live data. Do you have any scanner working for a VSA plugin? No, you've got to use, the only way you can do it is use the end-of-day chart. So I just think I got stopped out there on the yen, so I've taken a bit of profit on that. Let's have a quick look. There you go. So let's just cancel that. Okay, so I've got a small profit on the yen and a very nice profit on the S&P there. Okay, so a very nice day so far, and I'm sure there'll be some more trade opportunities early next week. In fact, next week, I think Tuesday could be a very big day for the market after the test. Yeah, Thierry, we will. We're building another version of TradeGuider, but at the moment, TradeGuider Real Time only works with eSignal. But to be fair, I've been using eSignal now for nearly 14 years. They're expensive, but they're good, and that's why I use them, because the data is excellent. And that's what Tom is using as well. I do not cut price on data. Data is so vital to, well, how important is good data to charting?
That's essential.
Essential, says Tom. And I'd go one step further. I spend nearly $2,500 a month on data feeds. It's absolutely essential. If you cannot afford a data feed, don't trade. Stop looking at the markets, because you've got to put the most important part of charting is the quality of the data that's coming in. And I have to say, I think in eSignal with their Forex data and their data for futures, it's the best I've seen by far.
We don't have to spend £2.5 a month.
But you don't have to spend £2.5 a month. You can actually get, well, Peter, how much do you spend on data?
I think 140 a month dollars.
And what do you get for 140 bucks a month?
I've got a special deal, and I get Forex, and I get the futures and the stocks.
Yeah, there you go. So Peter's just confirming there. He gets Forex, futures and stocks, $140 a month from eSignal. Well, that's not bad. That's for Trade Guide at RT, by the way, the real-time software. Now, just before I go, I just want to let you know, if you've got any questions, okay, we've got a guy that's working with us now, one of our customers who's joined the team, and his name is Abraham Cecina. Okay, he's based out of California, so he's on your local time. If you've got questions about trading the markets, you've got questions about Trade Guide, we've just updated the site, and you can contact Abraham. He's also been a prop trader, so he's a very clever guy. You can contact him on these numbers up here, or you can now just click here to leave a message for Abraham. These are all active, as you can see. This is the UK number, and this is the US number. They both go through to Abraham. Okay, good. Ian says CQG does very good data as well. John says, when will the next version of Trade Guide be available? We don't know. We're catching up with technology, I'm afraid. I mean, with the advent of the iPhone and the iPad and stuff, the software we were developing, which would only work on a PC, unfortunately isn't going to work for the future. So we are developing a program that will work on the iPhones, the iPads, but I don't want to put any. It's work in progress, I'm afraid. But again, that's like everything. I'm making money with the software we've got, and I've always done that. So what we've got is great. I just think we do need to now start to consider in the future where the market is actually going, and I think it's going to be traded from handheld devices in the next 5 years. I don't think we're even going to have desktops in the next 5 to 10 years. I think they'll go. I think everything will be on the iPads and the Android as well, Todd. Yeah, absolutely. Yeah. You don't want Windows 8, says Jack. Yeah, well, that's another challenge we've had as well. Every time Microsoft brings out a new version of their software, which is used by most PCs around the world, it clashes with some of the stuff we're doing. So you're always chasing it. But anyway, I hope you've enjoyed today with Tom. And you can see here, let's just summarize. We had the short on the yen, which I already alerted our customers to. And then, of course, the trade on the S&P. Was I right to close it where I did? Let's see if I was right. I think so. I think you ignore the signals at your peril. There's your stopping volume. The next bar confirms it, and now we're back up, and I would have lost money on the trade. Remember, if you read the dialog boxes, you'll understand what Tom's trying to teach you. And if you understand that, you can make money in the markets, and you can take a trade. It's a very clear principle. And here is the position in the S&P today that we saw. Sorry?
Can they see that?
Yeah.
Oh.
Should be able to. Yeah.
Changing on there.
No.
There's Tom frozen.
No. Emmanuel says seven times I've closed my positions while driving a car. Okay. Have fun. Anyway, there's the bounce. I expected the bounce off 205.857 was the initial target. Here's the principle. Highest volume you can see. 5-minute chart, and that's the bounce, and we close the position. A quick look at gold for Ian. Hello, Ian. I've looked at this, and I still think it's weak, but at the moment I'm not in gold at all. I'm waiting for it to show me and confirm this change in behaviour. It's actually traded. See this 50% line? It's a Fibonacci retracement. It's right on it. But once gold comes back down, I did mention it's going to head to 1,000. I still don't think that's. I think that's correct. But you can see the Fibonacci retracement on the 4-hour chart. There it is. It's retraced to the fib, okay, and now it's trading right on the fib. If that starts to break down next week, I'll be short gold. Absolutely. Good. Okay, thanks everyone. We're going to wrap it up. We're going to set the recording and get that over to you. And I hope you all enjoyed the seminar. And we'll see you hopefully in the Trading the Markets room. We're going to be trading next week from Bulgaria, actually. We're looking forward to that. If you are interested in joining the service, if you click on this button, if you're new to this, you can actually come and join our live trading room twice a week with myself and some of our team members, and you'll get trade alerts just like our members do when we see the setup like we saw today. So thank you very much, everybody. God bless. Have a great weekend, and we'll see you next week. All the best. Bye-bye.